The global financial world is bracing for what could become a historic Black Monday, as a perfect storm of political, economic, and speculative risks converges all at once. The warning signs are flashing red. Stock valuations are stretched to record levels. Market exuberance has reached an all-time high, and the underlying fundamentals no longer support the dizzying rally. Meanwhile, a worsening U.S.-China trade war, political gridlock in Washington, and growing concerns about a massive AI bubble are adding fuel to what could be a market meltdown, unlike anything seen since 2008. Valuations at irrational levels. The first red flag is valuation. Major indices like the S&P 500 and NASDAQ are trading at price-to-earnings ratios unseen since the dot-com bubble. Tech giants are leading the charge, with some companies now worth more than the GDP of entire nations. Analysts have repeatedly warned that this kind of overvaluation is unsustainable. Yet the market has continued to surge, driven by fear of missing out, of FOMO, and passive investing. The so-called Magnificent Seven, Apple, Microsoft, Nvidia, Amazon, Meta, Alphabet, and Tesla, now make up over 30% of the S&P 500's total market cap. This extreme concentration means that even a small correction in these names could send the entire market into a tailspin. When investors start realizing that earnings can't justify these prices, panic selling can begin in hours, not days. Unprecedented market exuberance and the AI bubble. The rally of 2025 has been fueled by blind faith in artificial intelligence. Investors have poured billions into AI stocks and infrastructure, convinced that the future will print infinite profits. But behind the headlines, many AI companies aren't actually making money. They are burning cash and renting chips from Nvidia at razor-thin margins. This speculative frenzy mirrors the dot-com era, when valuations were built on promises instead of profits. Once the illusion breaks, the AI bubble could deflate rapidly, dragging down not just tech, but the broader market. Oracle's recent crash after revealing minimal profits from AI infrastructure may be the first crack in that bubble. Trade war escalation. Trump's 130% tariff shock. Adding chaos to an already fragile environment, former President Donald Trump reignited the U.S.-China trade war late Friday by announcing a staggering 130% tariff on Chinese imports. The announcement came after markets closed, leaving investors no time to react until Monday morning. This sudden move is expected to rattle global supply chains, push up inflation, and invite retaliation from Beijing. Overnight futures are already hinting at a sell-off as traders digest the implications. Economists warn that this level of tariff escalation could trigger a new wave of global recession fears, as both economies suffer under rising costs and disrupted trade flows. Political chaos. Shutdown, deadlock, and layoffs begin. As if that weren't enough, Washington is once again in disarray. Congress remains deadlocked over a new spending bill, and the U.S. government faces an imminent shutdown. According to multiple reports, federal employees have already started receiving temporary layoff notices, further eroding confidence in the economy. Government shutdowns freeze spending, slow consumer demand, and ripple across sectors from defense to infrastructure. Combined with high inflation and weak consumer sentiment, the risk of a policy-induced downturn is higher than it's been in years. Why Monday could be historic? All these forces are converging simultaneously: overstretched valuations, an AI bubble, a trade war escalation, and political paralysis. Historically, markets collapse when investors lose faith in both growth and governance. The conditions now mirror the run-up to previous crashes: excessive optimism, policy shocks, and structural weaknesses hidden beneath record highs. If futures continue to slide overnight, global markets could open sharply lower. The Dow Jones, S&P 500, and NASDAQ may all face significant losses, while commodities like gold and oil could spike as investors flee to safety. Final outlook. Whether tomorrow truly becomes Black Monday will depend on how investors react to these simultaneous shocks. But one thing is clear: the illusion of endless growth is breaking. With AI hype fading, valuations at extremes, and political uncertainty at its peak, the markets have never looked more fragile. For everyday investors, this is the time to stay cautious, hold cash, and watch volatility. The coming week could mark the start of a historic correction, and a sobering reminder that every bubble, no matter how bright it shines, eventually bursts.